Hey guys, Zaman here. In this video, I am going to review Masterworks. If you are someone who lost money in the stock market, you need to know about this. And one company is at the forefront of this art investing movement, Masterworks. Masterworks was originally featured in Bloomberg in 2020 for being a new leader in the alternative asset movement. At the time, they managed roughly $36 million in assets under management and had roughly 80,000 users on the platform. Today, Masterworks manages over $500 million and has over 500,000 users, and has been written about in the New York Times, the Financial Times, and Yahoo Finance, to name a few. Simply put, Masterworks' growth is accelerating at a rapid pace, but you are probably asking yourself, why art? Why is an entire investing platform dedicated to art? And the most important question, is investing in art actually profitable? Before Masterworks even began securitizing paintings, they did the smart things. They did their homework. Using a team of art market analysts, they built out the largest database in the world for tracking artist appreciation rates, literally combining through thousands of auctions records going back decades and digitizing the data for the first time in history. They track the appreciation rates of artists and their work, and the in-house team now analyzes and updates millions of data points from this dataset. They can identify which paintings and which artists are accelerating in value the fastest, which is how they determine what art is considered investment grade. Through October of 2021, they have been offered $10 billion worth of art, but they purchased less than 3% of the artworks they are shown due to highly selective criteria for quality, provenance, and price. When Masterworks purchases a painting, it securitizes it through the Securities and Exchange Commission and then offers share in the work to investors. So users are investing in pieces of the paintings. This way you could get the upside of multiple artists and multiple pieces. Also, filing with the SEC means these are legitimate securities, so you don't have to worry about any scams or rug pulls. Art is no longer just paint on canvas, it's transformed into a financial tool for wealth preservation and accumulation. The 0.1% of the 0.1% have long been using art as a financial tool to preserve and grow their fortunes. Jeff Bezos, Bill Gates, and Oprah Winfrey have built collections valued in the hundreds of millions. Oprah actually flipped her paintings and walked away with a $68 million profit. Not too bad if you ask me. And before them, the Rockefeller family amassed the most valuable art collection in the world. It sold for a staggering $835 million. And while that's incredible, the value of art is only growing. Deloitte estimates that the wealth held in art will increase from $1.7 trillion to $2.7 trillion by 2026. And as an investment, it's been pretty consistent. Contemporary art has outperformed the S&P 500 by more than doubled from 1995 to 2021. That's a huge difference, especially considering there was a record bull market for a lot of that time. On average, contemporary art appreciates by about 14% annually. This alone makes art a potentially great addition to any investor's portfolio, but the benefits are not only growth. Art resonates with investors, myself included, because it is a real asset that does not correlate to stocks, bonds, or other financial instruments. Research from Citi shows art has a near zero correlation to equities, meaning if the market tanks, the art market can soar. That's why Citi said art's most attractive quality was its diversification potential. And it's not just about holding value. In fact, contemporary art has appreciated by 23% annually when inflation is over 3%. That's better than stock, real estate, and even gold under those same conditions. It's not just inflationary period that shows art's resilience. When stocks and crypto started to plunge earlier this year, the art market hit record highs. In fact, Warhol bought for $500,000 in 1967 just resold for $195 million. If you do some maths, that's an average increase in value of around $10,000 a day, every day for 55 years straight. When you consider all of this, it makes perfect sense why 85% of wealth managers believe in art as an investment. Now that you know art's the real deal, let me show you all how the website works and how the Masterworks process functions. I showed you all a little bit of the database and their process, so let's dive into the real fun stuff, investing. So here is the offering page. They typically will have 3 to 5 paintings on offer at a time, but they can sell out pretty quickly. Here you can see the size of the offering, which typically ranges from $1 to $15 million. So you know it's literally worth as much as a business, a mansion, or a garage full of sports cars. To see the investment thesis and more information on the artist, you can just click here and it gives you all the information, and each painting has the offering circular and SEC filings available as well. If we talk about past performance, as of this recording, Masterworks has launched over 130 paintings and their members have invested over $500 million with them, and the results so far have been incredible. Since launching their first offering in 2019, they have sold 5 paintings and gotten over 26% net returns to investors. And now let's talk about secondary market. Now you can realize gains in one of two ways on Masterworks. Either wait until they sell the paintings, which is what they recommend. That's how members saw 26+% return. Or if you need liquidity, you can sell your shares to other members on the secondary market. You can see right here what offerings are trending and some price history. Since it's peer-to-peer, there is a bargaining element to it, which does keep things interesting. And it's a built-in board style, first come, first serve. So what I love most about Masterworks is their ability to innovate and their expertise. They have brought the structure of the financial world to the elusive and opaque art market and are doing it in a way no one else is. In other words, this platform has single-handedly transferred art into an investable asset class, combining the growth of fintech and changing sentiments around alternative investments into an idea worthy of unicorn status. Being able to invest in smaller portion across works allows you to diversify your diversification. I have to admit, I am a huge fan of Masterworks. I firmly believe our portfolio should have an allocation to real assets, and art is no exception. And it's not just me. According to Deloitte, 86% of surveyed wealth managers believe there is a legitimate arguments for art to be included in a wealth offering. So if you are looking for an investment with a low correlation to equities, inflation resistance, amazing returns, and untapped potential, I recommend investing in art with Masterworks. So the links are available in the video description, so must check it out. And that's it for this video. Give this video a like and comment down below if you have any question. Subscribe to our channel for more amazing videos. Thank you so much for watching, and I will see you in the next one.